In several videos, I've actually mentioned sniper entries, and I always tell you that the best obviously way to trade is to actually be able to place these sniper entries. Well, in this specific video, I'm going to show you exactly what I mean by it, how you can find those sniper entries, and how these entries can actually make you tons of money instead of just trading randomly or following strategies that don't work at all. Hey everyone, this is Christian here on YouTube and welcome to a brand new video for the channel. Today, we are going to talk about this specific way of trading, which is sniper entries, and I'm going to teach you exactly how you can master this specific process. But hey, if you're new to my channel and you're into Forex trading, crypto, or any type of making money online, then this channel is for you. Make sure you hit that subscribe button below and activate the notifications bell icon so that you get a notification of every new video that I upload. With that being said, let's jump into the video. Hey, before I actually jump into the content of this video, I do want to give you a warning so that you can actually know everything in regards to this strategy. Look, what I'm about to tell you is not financial advice. I'm not a legal or financial advisor. All I'm doing is showing you the way I trade, and maybe you can do the exact same thing or something similar by learning from my experiences. This by far does not guarantee that you're gonna have the exact same results or anything like that. There's a disclaimer at the bottom of the description of this video. So don't take this as literal advice, and more importantly, pay attention to the actual things that I say so that you can transform it into your own trading strategy. I'm gonna give you specifics that you need to look into the market in order to place trades in a similar way, but I'm not saying, hey, place this trade or you will lose money, or play this trade and you will make money. All I'm doing is sharing my experience, so hopefully that makes sense. So now let's go ahead and dive right into the content. Now, the first thing that we have to understand is what do I mean when I say sniper? And when I mean sniper, I'm actually talking about the actual entry that is almost exact at a point where the price is gonna start moving into our direction or our predicted direction. What I mean is a trade that enters very little into a loss area and then goes straight to the winning area. Just like you're looking at right now in this specific trade or in this specific setup that I have, we can see that, I'm just getting my pen. We can see that the price literally entered very little into the losing area, and then it became a winning trade by looking at this. It literally touched this level only, and then it went straight to the take profit. As of right now, maybe the trade hasn't been expired yet, but we're talking at 3-to-1 risk reward ratio. So far it has closed automatically 2.64. So we're just waiting for the take profit to be touched. But that's what I mean by sniper entry. One trade that it literally almost don't go into the losing area and just automatically starts going in the direction that you predicted. That's what I mean with sniper entries. Now, let's go ahead and talk about the trades that I have placed right now into the market, and we're gonna start with this one, which is the AUD, or the Australian dollar against the US dollar. One thing that you have to keep in mind is that these trades are still active. So I'm not gonna show you some background of a year ago there was a perfect trade. No, I'm showing it to you right now so you can have an idea as to what's been going on. So the first thing that you can realize is that according to the previous video, which by the way, I'm gonna put somewhere in the corner so you can go ahead and check it out, which is the only technical analysis video that you'll need, I use the exact same strategy. So what I did is that I waited for a support line, which was this one right here, to be broken, and now that one became a new resistance point. So this is exactly what I did. Now, let's just go ahead and analyze this trade for a second. Why did I actually decided that I would need only this area or this trading zone? Why did I actually go with this trading zone? Well, there's a reason behind it. First of all, you can see that the wick of the previous red candle touched this area, And then this is the lowest low of that support line. So I thought, okay, that is the trading zone. So trades can either be placed in this section or in this section, any of them. Why do I mean trades being placed? The more trades are being placed in that point, the more strong or the stronger is going to be the movement towards that specific direction. So what I did in this specific scenario was, okay, so maybe if I put the stop loss out slightly above that trading zone, the stop loss is not going to be hit. So either it touched in this area or it touched in that area. What I mean is that institution and many other retail traders are placing pending orders in this section. So all the pending orders that were being placed right here got executed. Pending orders for short positions. At the moment that institutional trades and retail traders activated their pending orders, boom, the movement of the market went straight down. That's exactly what I mean. Now, if you want to know a lot more in regards to the same strategy, again, watch that video and you're going to be good to go. So let's go ahead and analyze another trade that I was able to actually have today. Where is it? It's GBP There you go. So this is another one, and this one hit the stop loss just literally a few minutes ago. Why? Because you can see that I actually chose this specific zone according to the wick of this specific candlestick, and I was expecting the price to actually touch this area and then start jumping. Now, it didn't happen that way, and there are many possible reasons as to why. Maybe not that many people actually place those pending orders in this section, but you can realize that I personally made one mistake. So I should have chosen this specific entry point right here. And if I would have chosen that specific entry point, a reason why: resistance respected, resistance respected, resistance respected, resistance respected many times. So that seemed like a slightly more safe entry point. If I would have done that, then the trade would have been activated like it did right now. Probably my stop loss would have been somewhere around here. Obviously, I have to do the analysis, and the take profit would have been here at the highest, at the next highest point that we have. That's 7.64 risk reward ratio. Now, I didn't do it that way. That was my bad. And this is what I mean by sniper entries. I'm not saying, hey, let's go ahead and place a trade with this stop loss of 1-1 risk reward. And even if it stays here for 2-3 days, then eventually it's gonna come up, or I'm just gonna lose the trade. That's not the way I trade. When I mean sniper, I mean it's a very small stop loss. This one right here is actually 28 pips in a 4-hour candle. And we're looking at 275 pips in profits. Why? Because what I'm looking at right now, it's basically a perfect entry so that it goes into my direction. Okay, that's what I mean by sniper entries. And now we're gonna see the other pair. AUD-CAD was the other one, and it's this one right here. This, if you notice, against the AUD, what was the other one? AUD-USD. Take a look at one thing. You can see that in the trading zone, this trade got activated on the first point of the trading zone. It never went into this area. But if you actually go into the AUD-CAD pair, this one got activated not by the first, but by the second area of the trading zone. It's still a sniper entry, but this one got activated exactly at this specific point, at the first point. So it makes a difference. Obviously, it does make a difference, because if I would have, right now the trade is actually for 274 risk reward. If I would have put my entry point in this area, it would be a 9.92. Obviously, this is just hypothetically speaking, but right now the price is actually still coming down. So these are the 3 trades that I wanted to show you as perfect live examples as to what do I mean by sniper entry. So hopefully that makes sense. Now, let's go ahead and talk about how to choose the right stop loss and the right take profit, which is something really, really important. Look, when it comes to these specific positions that we are going to be placing, we're talking about specific entries and exits that we need to have before we place these trades. Because look, if you actually have the wrong exit, meaning the wrong take profit, then the trade, even though it was a winner for a long time, might just retract and touch again your break even or your stop loss if you didn't move the entry point or the stop loss to break even. So you need to know exactly where you're going to get out when you are in profit. And two, you need to know exactly where is the right stop loss, meaning you're not going to choose a stop loss just to be conservative and just huge so that it never gets touched. And you're not going to choose a stop loss that is too little that is going to touch the stop loss and then it's going to go to your winning direction. So there are two things that you need to consider before choosing the stop loss. First of all, what is the entry level or the entry zone? We're not talking about a specific entry level. We're talking about an entry zone. And don't make the mistake of thinking, hey, you know what? This is the entry point and that's it. No, every single trades have a trading zone, which is why I have this rectangle right here that identifies the zone that you can actually choose to enter. So as you can see here, I could have chosen this entry point and that's it. That's my resistance line and that's it. But what happens if I actually choose this? I don't know exactly where I'm going to put the stop loss. So you need to know where you're going to put the stop loss. And in order to know that, you need to have a zone. So how do I identify the zone? I realized that there was a space between that lowest point and then the lowest point again of the next candlestick of the next support line. And I was like, okay, this looks like a good trading zone. So if I'm going to enter my stop loss level, I'm going to enter it not exactly at the zone, like right here. No, I'm actually going to enter it slightly above the actual trading zone. So we're looking at right here, would have been 12 pips or 13 pips. Then I moved it to 20 or 19 pips. Why? Because in the event that the trade actually gets activated by the second point, just like it happened with the other trade right here. This one, right? This was AUDCID. This one was activated here. So if your stop loss was right here, guess what? Boom, you're out of the trade. Automatically, you're out of the trade. So you put the stop loss slightly outside of the zone. And as it happened right here, it was pretty much risk-free. But on the other scenario, then you did have that specific scenario. How many pips? It really depends up to you. I really don't like to go a lot further than the trading zone. If the trade continues to go this direction and it closes, then just my analysis was not right. Not many pending orders were placed at that specific entry point. So I just got to accept my loss and just keep on moving, right? But that's how you choose the stop loss. And the take profit needs to be chosen according to the highest high or lowest low. Highest high meaning the next resistance line if you are going in a long position, and the lowest or the support line if you're going in a short position. Meaning, I see right here, when I placed this position, I didn't know that the price was going to drop up until this level. Maybe now I can just go ahead and move my take profit all the way to this level. Why? Because I see that there is a new resistance line. Same thing could happen. Well, this one was already lost, which I don't know why I moved this. This one was already lost, but this one I moved it. And this one right here, yeah, maybe I can move it as well to this lower point. Now, that's how you choose to take profit. It's not like, hey, I'm going to go 3-to-1. Yes, you can do it like that, but you might be just wasting a great opportunity to make even more profits than the 3-to-1. You could be making 4.21 risk reward, or even 4.17, even 7, 8 risk reward ratio. So at the end, what's important is that you know exactly once you're stop out or you take profit. And another extra tip that you need to actually understand is that you can close partials and do trailing stop. Close partial means you close. If you enter 2 lots, for instance, 2 lots in the trade, you can close 1 lot in this section so you can secure some profits and then just leave it running at a break even and leave it running to see if it hits the take profit. Is up to you. Or you can just do trailing stop, meaning, hey, you know what? Since the price is right here, I'm going to move my stop loss to around this area right here. And if it keeps on dropping, then I'm gonna move my stop loss again to this area, so that at the end, what I'm looking at is at different closing times and all of them in profit, okay? You just can't leave the trade running and just expect for it to touch the take profit. You need to actually be alert as to what is going on with your trades. So hopefully this explanation makes sense. If it's too confusing, I do recommend you to rewind the video and watch that part over and over up until you master it, because not having the right stop loss and not having the right take profit is one of the main reasons why a lot of great strategies end up losing money. So go ahead and check that out. Now, this is another important topic that we need to cover, and is, Chris, what happens if I lose the trade? What happens if I lose a trade? Or sometimes you place 2 positions in one day and you lose both of them. Hey, what am I doing wrong? There's nothing that you've been doing wrong. And if you're following these tips that I'm giving you, look, at the end of the day, what I'm giving you is, how can I put it? Signs that there are going to be some entry points in certain sections, but it's not 100% guaranteed. And there's nothing in trading 100% guaranteed, okay? So when you lose a trade, it simply said, or it simply meant that not many people placed orders at the same point that you thought that they were going to place orders. The point of this game and the trick of this game is to actually try to understand where institutions and other traders are placing their pending orders. Okay, why? Because if I'm at this level and you see a retraction and you think, okay, this is the level where many people are going to be placing trades, and you entered that position and you were exactly right, then boom, you see an easy trade and you're like, oh my God, this is easy, right? And then when you see that the price doesn't go into that direction and instead hits the stop loss, then you're like, whoa, I don't understand the strategy. That's not the point. The point is that not many people enter in that specific trade. There could be many reasons. There could be news, or it's just simply you made the analysis wrong, or you had the wrong entry point. But the more you do it, the more you're gonna master it. The more you're gonna be, it's gonna be easier for you to identify the entry points, the retractions, the trends and stuff. So when you lose a trade, don't change your plan. Keep on practicing, keep on mastering the same strategy, and trust me, you're gonna have a lot more chances to actually make money than other people who are switching from one strategy to the other one. So please keep that in mind. All right, so this is super important, and I want you to pay close attention to this. You already know that I think funded accounts are like the best option for you to make money if you are in the Forex market and you don't have $100,000 to actually invest. So I want to take a couple of minutes to just explain you what are, I think, the best funded accounts for 2023 that you should be using. And the first one is actually this one right here called E8 Funding. Why do I think this is one of the best ones? Because not only it's trusted, it pays out, which is something crazy. For instance, my first class funding, they never gave me my $100,000 account. I literally stopped trading with the $25,000 funded account that I had because they never gave me my $100,000 account. They didn't reply to my emails or anything. But E8 Funding has proven that they have good support. They pay out because I've received payments already from them. And this is the key ingredient to what I think is the best option, at least for me, is that they accept crypto payments, which means Bitcoin, Coinbase, anything. So I think this is one of the most trusted companies as of right now. And they have different options. They have options for $100,000 account. They have options for $25,000 account, and so on and so on. So in the end, I do believe that going with a trusted company is gonna be a huge difference between you losing a bunch of money or making tons of money. Look at the account size for a $25,000 account. All you have to do, or the payment, where's the pricing at? Oh, there you go. It's $228. It's pretty cheap. For a $50,000 account, it's $338. That's very little money. For $100,000, which is the account that I have, it's $588. And for a $250,000 account, it's a total of almost $1,000. But you get a $250,000 account. Obviously, you have to pass the challenge and, in the end prove that you know what you're doing so that you can get a funded account. But I am assuming that if you're watching this part of the video, you have the confidence and the experience to actually go through these steps and still become a funded trader. So by far, E8 funding. And the second account, or the second company, I think, is FTMO, which is in the world the most trusted funded account company right now. Easy payouts, fast payouts, great accounts to actually go and try them out. We're gonna go into the FTMO challenge right here. Okay, it's actually telling me to go ahead and log in because I already have an account with them, but let's go ahead and take a look at the pricing. For a $10,000 account, it's 155 euro. For a $25,000 account, it's a 250 euro. For $50,000 account, it's 345. It's pretty similar to pricing, 540. And $200,000 is 1,000 euros. It's slightly more expensive than E8 funding. And the only downside that I have with this specific company is that they don't take crypto for getting those funded accounts. But if that's okay with you and you can use your credit card, then definitely this is the best company for you. So I'm gonna put the link to both of them below in the description of this video so that you can go ahead and check it out. Both of them have free trials if I'm not mistaken, but if not, still, you can just go ahead and purchase one, play with very little risk. You have 30 days in order to pass the first phase of the challenge and 60 days for the second phase. So the invitation is right there for the two best companies that I think for funded companies in the world right now. But Chris, what happens if I decide to actually get a funded account, but how do I actually become a funded trader? Look, you have so many options to actually become a funded trader that you can find around the world and online and stuff. But I do believe that the trick behind becoming a funded trader is how you manage risk. That's as easy as it is. Why? The accuracy of the strategy is not the most important thing. The amount of pips is not the most important thing. You can make 1,000 pips in gold, and then you can make 10 pips in euro against the US dollar, and the 10 pips could mean a lot more money. Why? Because the most important thing is the risk. So what I mean by this, first of all, is the risk reward ratio. As you can see in this trade, it's a 4.17 risk reward ratio, which means you're gonna make 4 times more than what you lost or what you are willing to lose in this specific trade. That's number one, risk reward. And number two, how much are you risking per every single trade? What I mean is, I see a lot of people, and it's pretty darn amazing how some people just simply don't understand that the lot size is not the most important thing. It's not, look, I just want to trade one lot. No, the important thing is what's the leverage, what's the pair, so that you can choose the lot size. So you need to identify if your leverage is 1/500, obviously there's going to be a different lot size than 1/100. Does that make sense? So in the end, one thing that I think it's important that you can do is actually to learn how to use MT4, because most of these two companies offer MT4, MT5, and only FTMO offers C-Trader, which is easier to use. But if you're using MT4, most of the times you're gonna be placing pending orders, at least if you follow this strategy. So you can do one lot and see, okay, when you put the stop loss and the take profit, just go ahead and drag your mouse inside of the stop loss, and it's gonna tell you exactly how much you're risking. And if you have $100,000 in your account, let's say that you bought one of those, you have up to $8,000 in loss and $5,000 in 1 day of loss. So if you risk $2,000 in every trade, obviously you're gonna be a huge risk of losing your funded account in just 1 day or maybe 2. But if you're risking, let's say, $300, $400 in your account, and you're using this reward ratio. So let's say that you place 10 trades. Out of those 10 trades, you're gonna lose 6 and you're gonna win 4, 40%. Oh, it's so bad. Let's analyze it, right? So out of those 6, you're gonna lose for 300 each, you're gonna lose, 6 times 300, you're gonna lose $1,800. But guess what? The 4 trades that you had was a 3-to-1, let's say 3-to-1. So 3-to-1 means that 300 times 3, it's $900 each, times 4 that you lost, minus the 1,800 that you lost, you just made $1,800. Does that make sense? So the most important thing in order to become a Forex funded trader is to actually choose a good risk reward ratio and know exactly how much you're investing. Never invest 1-2% of your balance. I would say 0.1 to 0.5 is enough per trade so that you can actually have a very big space in order to lose several trades. As long as you win a few, you are going to be profitable. So that's the key of becoming a funded trader. So hopefully this advice helps you out. And the last topic that I want to cover in this specific tutorial is how many trades should you place per week. I'm not going to tell you per day because there might be days where you're not going to have any trade to actually place because the market doesn't give you an entry. So per week, I saw this Rocket 21 challenge a few months back, and there were people placing 20, 30 positions a week. That's not the case. That's not how Forex works. When you see people placing 30 trades a week or 40 or whatever and making $3,000 out of a $100,000 account, and then you see a person placing 4, maybe 3 trades and making $10,000, you know they know what they're doing. Does that make sense? Quantity is not here. It's quality as usual. So I would recommend you not to place trades that you're not sure that they're gonna be good trades. I'm not saying, hey, if you're wrong, then you were sure, then you're like, okay, I don't dominate. No, what I mean is you have a gut that tells you whether the trade might be good or not. And you have to trust that gut. If you're entering a trade saying, I don't know if this one is gonna go, but it's just gonna put it anyways, that's not a good trade. That's just an extra trade. It's a waste of trade. Even if you win it, it's not gonna help your career. So what you need to do is place the trades like, hey, this is gonna be a winning trade. And then expect, then maybe the trade is a loss and you're like, okay, I gotta, retest my analysis on the entry point and stuff. Or even if it doesn't get touched, because sometimes it happens, then you move on into the next trade, okay? But don't place too many trades. You just gotta place as many trades as you think they're gonna be winners. So hopefully that makes sense. So hey, hopefully you enjoyed the content of this video. I know it was longer than usual, but hopefully you enjoy it. And more importantly, that you keep on watching videos just like this one, because in the end, these videos help you out in order to be even more profitable at Forex. So if you enjoyed the content of this video, make sure you smash the like button as usual. And if you have any questions or comments to share, you can always use the comment section below and my team will be happy to reply to you. Thank you for watching this video and I'll see you on the next one. Cheers.